Welcome back to A Bite from the Money Sandwich, where we provide practical and easy to understand tips and ideas on how to manage your money better, so as to let you retire with comfort and on your own terms.
Ever wondered how to access the wealth tied up in your home without the need for selling it? Today I am joined by Andre Karney and Kevin Wunsh, co-founders and joint CEOs of Inviva. Andre and Kevin share how reverse mortgages can give retirees financial flexibility by unlocking home equity without monthly repayments. They explain how borrowers can access up to 20% of their property's value at age 60 with no risk of owing more than their home's value. They also discuss market trends, government alternatives, and why financial education is the absolute key to empowering retirees. If you or someone you know is asset rich but cash poor, this episode is an absolute must listen. Well, hello, Andre. Hello, Kevin, and welcome to the show.
Hi, Mark. Thank you very much for having us. Pleasure to be here.
Hey, Mark. Thanks very much.
Now, it was very fortuitous, and I've been driving around Sydney of late, and I've just been seeing Todd Woodbridge's face pop up on bus stops and around, and also was contacted by your media person about Inviva. So it did really get me interested. It's something I was interested in looking at this about 15, 20 years ago, and I just know it's changed. So it's great you guys can be on the show. But please tell me a bit about Inviva, because it's really just grown so rapidly since 2023.
Thanks. Good. Thanks for the question, Mark. Look, Kevin and I have actually been friends for about 35 odd years, and so we go a long way back. We both got long careers in finance, and we started to look at the reverse mortgage space about 3 years ago now, and it actually started when we both saw our families, trying to make sensible financial decisions, and they were looking for money, not having enough super, and trying to come up with a sensible plan around looking after themselves while in retirement. And so we started to look at the space together, and quickly kind of realized that the regulations and everything else that looked after customers today, and looked after the lenders, quite frankly, as well, kind of made sense for us to explore this area a lot deeper. And so
I suppose the problem is for so many people, and from my past, they were asset rich, cash poor, as you said, didn't have much in super, but they really didn't want to let go of this beautiful home that they had been basically built to exactly the way they wanted.
Yeah, that's correct. So that's one of the main issues facing this part of the market. They are generally, as you say, asset rich, cash poor, but there are limited options once you get past the age of 55 in terms of how you can manage your financial affairs, particularly if you have limited superannuation. So a reverse mortgage is a terrific solution to that problem. And so we saw a large market, and we saw, as Andre mentioned, that from real life cases that this was something that we needed and could solve with this product. And so we spent quite a bit of time understanding the market, assessing the new regulations, and that was a critical part for us. Was the historic product is very different to what exists right now, where it's controlled in the National Credit Code. With regulation, as Andre mentioned, it protects both the lender and the borrower. And that even playing field was very important for us in making a decision to start the business.
And so just a little bit more in depth on that, because that's really, your home equity release is different from the traditional reverse mortgages. Do you want to just, people listening to this want to have a financial background or degree. So just, in layman's terms, how does it differ, if you wouldn't mind?
Yeah, look, I think first of all, I'll just add one comment on to Kevin. I think customers often find themselves stuck with their existing bank and those banking relationships which have serviced them for a long, long time. And they get to an age and stage where they are nearing retirement or in retirement, and the banks are typically not that keen to lend to them. And they then start to look at this equity release as an option if they know about it. And to answer the question, an equity release loan, firstly, you are not subject to demonstrating serviceability. The equity release loan has to be a first mortgage. So if your first mortgage is still with your bank, we pay that out. Okay. It's limited, and this is a key part, it's limited by the amount you can borrow as to your age. So for example, if you're 60 years old, we could only lend you a maximum of 20% of the value of the property. So it's limited on that side. You can never owe more than the value of the property. But even at those low LVRs, you shouldn't get there. And it's, again, very different to the other days. But that is an absolute safeguard for customers. You can take the money. You don't need to make any monthly repayments. You can if you like. You can pay it off any time. So it's a very kind of user-friendly product for the customers. They can take it as a lump sum. They can take it as a monthly income. They can take it as a line of credit, or all three. So it's a pretty flexible and user-friendly kind of package, if you like.
Because I get that, your needs will change, whether it's, some people might want a bit of a top up of their pension or from their super, but then they've got to every 3 or 4 years fix up the house, whatever they think. And that lump sum facility, it makes sense. Yeah,
and when you start digging into the used cases, a lot of those things that you've just kind of mentioned start to pop up. And life expenses come along that you need to assist children in getting into their first property. You need to look after yourself and your assets, and sometimes they need to look after parents that are potentially going into aged care. And
I think the important thing about the product is the flexibility. Mm-hmm. So once we determine the amount we can lend somebody based on, as Andre mentioned, the regulations, they have the option as to how they want to receive the money. And so that gives them the flexibility in due course, should a situation arise that they weren't expecting, to manage their financial situation better. And so that flexibility and that solution approach is what I think differentiates ourselves and trying to help the customer. And that's critical.
How big is the actual reverse mortgage market? I know it sort of dipped for a while, for a number of years, but it's now sort of, especially with the cost of living increases everyone's finding at the moment, especially retirees. But that's how big is the reverse mortgage market or home equity release?
That's a good question. In terms of the product, it's been around for many, many years. So, the traditional product had a flurry in the late, I guess before the GFC. There were a number of lenders, many of whom still have a book of mortgages and people who are currently, being supported by those. So it's actually bigger than we would expect. So that, we don't know the exact number because a lot of these are somewhat dormant in the context that these organizations are not actively lending, and so getting the published information is not available. But what we're seeing now is a significant increase. So one of the largest lenders has a book of around $2 billion. So we expect it's probably in the $3 to $5 billion range of current mortgages, but the number of Australians that are 55 and above is nearly 6 million, and so the potential opportunity to help that cohort is significant.
Yeah, and definitely because a lot of the people there came to super late because it's only been around. If you're in your 20s or 30s, your super at nearly 12% will be fine. But for a lot of people, my generation and older, just don't have that. So this is great because really, so many people talk about downsizing, and the government has even helped with the downsizer contribution so they can top up their super if they do that. But you must be fine. There's a lot of people who just don't want to sell.
I think the government also came out, I know the government came out with their reverse mortgage as well, called the HEAS, which also follows the regulations, and they're much smaller amounts, but they've also done that. Yes, people generally want to age in place. They're comfortable in their neighborhoods and with the neighbors and where the shops are and so on, and as probably we all are. And the downsizing does have its challenges. It may be appropriate for certain circumstances, but it has its challenges where you need to start working out, well, how much money do you need for your retirement and for the rest of your life? And that's a hard number to really put your finger on, I guess. Then you need to invest that money. And so depending how much that is and what the expertise is, you've got kind of that challenge, the cost of selling and then stamp duty of buying. So there's a lot involved in it. And I guess each person is different and their circumstances need to be looked at.
And you also mentioned superannuation, and it is so true. You would be so very surprised at how many Australians above 55 have very little, if any, superannuation, because as you suggest, they were late to it. They've also started to use it to support themselves as they've got older. They've had access to it. During COVID, there was also a run on, using superannuation to support people who couldn't work. So it's a surprising number of people that need a solution and don't want to downsize.
And just practical side of it, the amount of people who said that famous old quote, you're going to have to take me out of here in a box. They really do not want to leave their home. So it's just providing options to people. And, I've one of the things I always say, anyone who's over 55, whether you believe in financial advisors or, whether you should do it, it's something that's so important because there's just so many rules are coming around to retirement and options that everyday people, you just don't hear about. And, exactly in the same, you're doing the right thing and promoting your product and people out there are getting to hear about it. But most people, unless they go see a financial advisor, just don't know about these things. So it's really important. Now, the other thing that is really, though, is important is that, they want to stay in their own home. You have to take me out of here in a box. But so many people are still hesitant about putting debt back onto their property. Home equity, it's one of the things I teach about is, use the equity in your home to build other assets and teach your kids how to do this when they buy property. But you must strike that when seeing up to people saying, putting a mortgage, first mortgage against I finally paid my mortgage off. Why don't I put another mortgage back on my property?
Yeah, it's a good question, and we had a customer today, and he had been living pretty frugally, I think, and had been trying for a long time not to do this, and you could see in the meeting when kind of the daughter was saying, please, we want you to do this for yourself and to kind of live your best life. And you've worked really, really hard to own this property. And it's okay. And you could see almost the body language and just this penny drop that it was okay to do that. And I think, yes, I think for some people it is something that's challenging to think about. While saying that, they've worked really hard their whole lives, so why should they not enjoy it?
Yeah, I think a lot of it is actually, you're absolutely right. It's a really good point you've made because so many people, I said, well, I don't really want to spend my children's inheritance. This is what I have. And when you bring the children into adult children, Mum, Dad, you really don't need to do this. We do not want you to scrimp and save. So it's a really important thing that too many families don't have that conversation. And I call it the conversation in retirement, for aged care, for estate planning. It's just so important to have that conversation.
That is so true. So a major part of what we need to do is educate the market around the product, about the regulation, so people better understand why it is a good solution. And I think that's part. The other bit which you touched on and I think is important for people to understand is the kids have their own financial difficulties at times. And so if you're, in your 40s and you've got 3 young kids at school, there are massive expenses, cost of living's gone up, they've got their own mortgages. So if mum and dad have an asset which is available, they would much prefer the parents to sort their own situation out than have be reliant on the children. And that's something we're seeing a lot more. And Andre's example there of that use case was a particularly good one because it showed the release in terms of the father who had thought he was protecting the child, but the child was also much happier for the father to live his life and wasn't expecting because they didn't want the burden either way. So it was a solution for both sides of that family.
And, as you said, school fees, and we're just having discussion with some people. Both my daughters are long out of school, but just talking about people who have got children and they're both having to work to get that, some, 30, 40,000 a year. And there are, it's not official, but there's sort of rumors going around that, nearly a third or half of all private school fees are paid by grandparents. So probably getting to the nuts and bolts of the product, if you wouldn't mind, because people will say, oh, okay, if I really do, am happy to consider about using my home for equity, what sort of things that they'll, be worried about? As you said, there's governance in place regarding that, your home can't be used up and there's certain limits. So what are some of the popular questions or questions people ask you about this product?
That's an interesting question. So obviously they want to understand the cost of the product and
Sure.
how, and in particular, if they're able to reduce the interest, which compounds by making payments. So we often have conversations which reflects on the flexibility of the product. So as you mentioned, you can take it as you want, but you can also make payments as you go, should you have the ability to do that. So it's very important for people to understand the flexibility of the product, their options. We also have the ability for people to come back for a top-up at a later stage if they require, and if the value of the property facilitates a larger amount or an increase in that. So people are very much wanting to understand the flexibility and when the loan is repaid, which is obviously a very important part of the conversation. And a reverse mortgage is repaid when the borrower or the youngest and last of the borrower leaves the property. And so that might either be because they sell the property, they move to aged care, or they pass away. And that's the point in which we get our money back and the loan is repaid. And in the event of passing, it goes through the probate process, and we get paid at the end of that when all of the estate is settled appropriately.
Okay, and and I don't know, but for the people I've experienced who are looking at this, who are needing the funds to top up their super pension or even government pension, they most likely aren't going to pay back for it. So it is a compounding interest effect, isn't it, on that loan?
It is. It absolutely is. And we are at pains to make sure that everyone understands how that works. There's a government calculator where we send that to them and then run through that with them just to make sure that everyone understands that. Again, to borrow the appropriate amount for the right thing. So we are very conscious of making sure that the purpose is correct and makes sense. So there's kind of a lot of things to cover when you're assessing. We naturally, the customers want to see the valuation of the house, and so do we. So we have a calculator where people jump on and they see what the anticipated value would be, and given their age, what they could typically borrow. And then we start a conversation or they put an application in. So that's kind of how.
Just to add to that, some of those disclosures that I mentioned are required by regulation. So in terms of the Money Smart calculator, we are required to provide people with equity projections as to what the loan would look like in different scenarios for that borrower over different periods of time. So that gives them an understanding of the implications to the equity value that they'll have in 3 years, 5 years, etc. So that's mandated by the law, and there are certain other disclosures. So it's very well controlled in that sense. The other important bit is we do have an obligation to be responsible lenders, and as part of that, whilst we don't check for serviceability because the loan is not serviced with interest being paid on a regular basis, it's important and a very critical part of our process is to understand the use of the facility and behavioral patterns and make sure that the loan is appropriate for the customer. And we look at things like vulnerability, coercion, because it's important to protect the borrower so they're not finding themselves in a predicament where someone is taking advantage of their financial situation and forcing them into a loan. So there's a lot of work that we do around assessing the appropriateness of the loan to make sure that it's suitable.
Brilliant. And that's really important. And you were mentioning about the Money Smart website, which I think is just a gem, a hidden gem that very few people use, but it's just incredible. And it does have a reverse mortgage calculator on there. So that's great. That just reminded me, because I really, people should, if they're interested in this, they can go on, do their own research, do their own calculations. And it's also, I've always been an advocate, if you're going to make a major financial decision, you should get advice. You should just see exactly as you said, Kevin, is this appropriate? What are you actually using this for? It's one thing I do, and it is one of the important things that it doesn't get brought up, because I did bring up the negative that yes, that loan will keep compounding because but of course your home will keep compounding. The value of your property will keep growing. And that's one of the really big things. People say, oh, if I downsize and I get something smaller, just to release the equity. Well, now you've got a much smaller home at a much smaller value in a lot of cases. Whereas if you had kept that, especially in Sydney, $2 or $3 million property, that will grow at a compounding rate as well.
And that's right. You have a bigger asset, which for most people will be capital gains tax free, assuming it's their principal place of residence. So you have a bigger asset base, hopefully growing in value and tax free. So that's kind of one of the things to really think through, together with what we chatted about earlier around the costs and challenges of the downsize, and how you generate returns on investments and things like that. So yeah.
And just now, and I've seen, as I said, I first noticed it when I saw Todd Woodbridge's famous face on a bus stop. So he's recently become your brand ambassador. So how did that come about?
Well, tennis. Kevin and I are both big fans of tennis. We've both grown up playing it. We've grown up watching Todd and admired him. So there's your starting point. And when you look at his, I guess, his values and what you kind of see when he's talking, and kind of the respect, I guess, that you get from him, he seemed like a natural fit to our business and to our brand, where we absolutely are very, very conscious about doing the right thing by customers and ourselves with our people in-house. And so values was a big piece of that. And then he, quite honestly, without going into any detail, it really resonated with him, because he, again, with his family, had seen a situation which could have been dealt with this kind of product. It's his first foray into doing anything outside of tennis and the tipping point, and so he's particularly excited about it. It resonated with him, and we got on really well together. So we've been really happy with that.
Excellent. And I played tennis, the old tennis elbow, so I stick to golf now. But it's a matter of he's got that unique ability as a sports person that he can actually speak. He's very eloquent and very clever. So I enjoy listening to him whenever the Aussie Open or any major tennis tournament's on. So no, I think he's a great choice.
And he's a delight in person. So it's worked out fantastically for us.
Oh, well done. Okay, so probably from Inviva's point of view, if someone's considering it and over 60, you of course don't want to wait to the very last second. I'm on my last dollar, so I need to come in, and this is an emergency. This should be planned. This should be thought out. So really, I know we've touched on it, but probably is a couple of key things that you would just say. Yes, get a plan. What do you need it for? How much do you need? Those sort of things. Is there anything else that someone should do if they're pre-thinking about this? Do the calculation, maybe?
Look, we've been very thoughtful about putting together our website with a lot of information and a lot of depth there. So I would encourage people to just look around, jump onto whatever calculator, think about it. You know, you would talk to any advisors, I guess, that you have, or friends, family, and you know, the more information you kind of gather, I guess, the stronger you are and are armed to make what should be a sensible decision. And we are absolutely about customers making the smartest and best decision for them. And we never want to be involved in doing loans where it's not appropriate, right? So that's what we're looking for. And for customers, yeah, I would encourage that.
I would also encourage them to call. We've got a very informed customer care team that can give them all the details around the product to supplement any information that may not be clear. But between the website and the customer care team, they can get a very, very good understanding of the product. In order for the process to be as smooth as possible, the better informed, the easier it is. And we have a very easy process online for a customer to fill out an application form. And if we have all of the information, we can process it relatively quickly for them. And so, yes, it's important to become to the process prepared, but we've got a very seamless, easy process as well.
Brilliant. And I just really, just from my own experience, I do really see, you know, sort of more philosophical, but ageism. And you started right at the beginning, Andrea, saying about, you know, how banks, it's just the way they treat people who don't have a salary anymore, but maybe asset rich, you know, even trying to get a credit card, you know, so they could travel overseas. There really is a problem. So anything that you could actually do to help this is a good thing.
Yeah, it's not nice to say it, to be honest, because people have done the right thing, and have paid back their loans, or they may still have a mortgage, but they've all the way along they've kind of done the right thing, and then they've kind of got this asset or these assets, and now they want to simply get some money, and the bank is not there for them. So it's challenging. It's not always the case, but wow, it's most of the case.
And one of our important considerations was that we're actually turning the discussion the other way and saying, this person has actually done very well. They've accumulated an asset. They've worked their lives. They've managed to have a family. Kids are grown up. They deserve the benefits of what they've achieved over a lifetime. And so rather than having any sense of, disappointment, this is about living the life that you dream of. And we can enable that so that people can go and, live their retirement in confidence and comfort, knowing that they have access to funds for emergency, for healthcare, for renovations, to help their children. And that's an important part of changing the perception.
Yeah, and we only saw a few elections ago when the federal government tried to do something against the grey army, how well they can get mobilised. So it really is, it's banks, the finance industry, and a lot of other industries do need to sit up and take notice, because we do need to help our people who have worked hard all their lives, have built assets, and not drawing on a government pension in most cases. So, yeah. Okay, guys, really, it's great you being on the show. It's just a really well-needed product to give people more options when they are in retirement, and maybe if it's going to be a struggle because they are asset rich but cash poor. So I really appreciate this. But one of the things I always do is always ask, what's the one piece of advice that you've heard or you've lived by, that you've heard, financial or otherwise, and it could be either of you or both of you, but yeah, it'd be love to hear what you may have heard over your lives.
So for me, I would always go by, you do unto others and as you would do to yourself, and that applies in both personal and in business life. You look after people. And if you do that, I think that sets you up for successful in both your personal and business life.
I couldn't have said it better, because I had written down, help those less fortunate and don't judge, treat everyone equally. So we're probably very aligned, and that may be why we have a very good partnership.
Could be 35 years together.
Well, yeah, if you've survived past most marriages, so you've done well 35 years. No, guys, thank you very much for the show. Andre and Kevin, really appreciate your time today, and I look forward to hearing more and seeing more on Todd on bus stops and on the news and promoting your very good product. Thank you very much.
It's our pleasure. Thank you very much for having us. Thanks, Mark.
I hope you enjoyed this episode. If you'd like to know more about Andre Karney and Kevin Wunsh and Inviva, visit www.inviva.com.au, or feel free to email me on admin@themoneysandwich.com, or visit our website themoneysandwich.com if you have any questions or would like to learn more.
Visit my website, themoneysandwich.com, for free templates, online calculators, and subscribe to our newsletter to help you now for a better retirement tomorrow. As with every podcast, this information is not advice, as not personalized to your own situation. And past performance is never guaranteed for the future. What we are trying to do here is to provide tips, coaching, and education to help improve your money knowledge, which we believe can only be a good thing. See you next time when we take another bite from the Money Sandwich.